We'll call the meeting to order. We respectfully acknowledge that the county of Haliburton is located on the Treaty 20 Mississauga territory and in the traditional territory of the Mississauga and Chippewa nations, collectively known as the Williams Treaties First Nations. We acknowledge the shared presence in the Indigenous nations throughout the area and recognize its original inhabitants as the stewards of lands and waters since time immemorial. Is there any disclosure of any interest? Seeing none. Approval of the agenda.
Warden, if we could, slight amendment, if we could request the movement of the Land Division Committee report to the consent agenda from the regular agenda with council's permission.
Yep.
That the April 23rd, 2025 Haliburton County Council agenda be approved as amended.
So move. Councillor Carter, Councillor Shell. All in favor? It's carried. This morning we have Oscar Poloni with us. Welcome, Oscar. Looking forward to your report.
Well, good morning, Warden Burton, members of County Council. Thank you very much for allowing us the opportunity to be here today to provide an overview of the financial statements for the County of Haliburton for the year ended December 31st, 2024. So to facilitate the presentation to council, what we've done, similar to what we've done in the past, is we've prepared a very brief presentation that provides an overview of our audit highlights as well as the financial statements. So next slide, please. So our audit was completed in accordance with Canadian auditing standards, and these are the rules that govern how auditors conduct audits of financial statements, consistent with past financial statement presentations. And as we've discussed, council, we don't say your financial statements are accurate. Rather, what we say is they're fairly presented in all material respects. In order for us to say your financial statements are accurate, we'd have to test every transaction. So when we talk about materiality, materiality is the threshold that as auditors, we are able to absorb before we either require the differences that we find to be corrected or we change our audit opinion. Consistent with other municipalities and public sector organizations in general, you don't have a profit motivation. And for profit entities, materiality is basically calculated based on net income. For the county, it's been calculated as a percentage of your prior year's revenues. And under our standards, we're allowed to go up to 3% of prior year's revenues. And that gives us a materiality of just over $900,000. Now, council, for the purposes of our audit, we use materiality in a number of different ways. We use it, for example, to calculate our test samples. For example, it calculates our sample sizes. But for council, what I would suggest to you is the most relevant use of materiality is it determines the posting threshold. The posting threshold is the level above which, if we have an error and it's not corrected, we have to tell you about it today. So our posting threshold is calculated as 5% of materiality, or an amount of just under $45,000. That is, for lack of a better term, the level of precision that we have from an audit perspective. So our audit is complete. Under Canadian auditing standards, the audit is live until such time as the statements are approved by County Council. So what we really need to have is two things. One is we need to have council approval of the financial statements. And secondly, what we require is a management representation letter. And this is a statement from your staff indicating that they've disclosed all of the information to us. There's nothing that they haven't provided to us whatsoever. So we'll get that off to Andrea. We'll have that signed, and then the audit will be complete for the year. Your financial information return, which is a required filing for the ministry, is complete. We're just waiting for the financial statements to be approved. We'll have final statements and your FIRs or FIRs filed by April 30th, and the audit will be done for the year. I will say, council, the audit has gone very well this year. We've had excellent cooperation and responsiveness from staff at the county. The audit has gone very well. We started work early to be able to make sure that things were rolling forward from last year appropriately and to identify any potential audit issues. And there's really nothing from an audit significance standpoint that we have to report to council. No disagreements or difficulties with management, no scope limitations. Excuse me, we haven't seen any indications of fraud or issues around your internal control weaknesses. And with respect to the unadjusted audit differences, there is one difference relating to an accrual for interest of about $76,000, which is well below materiality. And so from our perspective, the audit has gone very well. And we would like to thank the finance team and the staff of the county for the cooperation that they've provided to us during the course of the audit. So next slide, please. So the first statement is your statement of financial position. And what this discloses, council, is your assets, your liabilities, and your accumulated surplus at the end of the year. So just in terms of some of the changes from a year-over-year basis, what you can see is that your cash and investment balances have gone up by about $10 million on a year-over-year basis. Now, council, there's a number of different things that pull your cash balances up and down. So during the year, there was a cash adjusted operating surplus of roughly $6.6 million. This is taking your surplus and adjusting it for things like amortization expense, which really don't have cash associated with it. In addition, your working capital, which represents your accounts payable and accounts receivable, have added roughly $2.7 million to your bank balance. And so I'll give you an example. If your accounts payable goes up, those expenses are deducted for the purposes of your surplus, but because you haven't paid those expenses until after year end, it's still sitting in the bank. These two sources of funds, your surplus and your working capital changes, have been used by the county. So there was roughly $800,000 of principal repayments of debt during the year. In addition to that, you bought about $4.5 million of capital additions. So the surplus and the working capital brings your cash balances up. The capital expenditures and the debt repayments bring your numbers down. What you will find is your accounts receivable has gone down by about $420,000. And there's a number of things that you have inside accounts receivable. So HST that's owed to the county at year end dropped by about $140,000. You do get a portion of your HST back. And so because of that, depending on capital and the timing of those capital expenditures, that receivable will go up or down. The amounts owed to you by the local area municipalities for the requisition have gone down by about $100,000. And that, once again, is just a timing of the payments of when you receive the money. And additionally, in 2023, there was about $108,000 of receivables for flood protection funding that wasn't present in 2024. And so because of that, the number would go down on a year-over-year basis because of that. I'll talk about investments in a little bit, but from a liabilities perspective, when you look at your accounts payable and accrued liabilities, these are expenses that you incur prior to year end, but pay after year end. They've gone up by about $1.8 million. The biggest chunk of this, council, is an amount that you owe to the County of Peterborough with respect to a shared capital project for County Road 503, which increased your accounts payable by roughly $1.4 million. In addition to that, payroll accruals, which include amounts that you owe employees up to December 31st, along with the associated remittances and banks, have gone up by about $148,000, and your trade payables, which is all of your other invoices that you have, for example, have gone up by about $326,000. So, council, if I may, just a bit of information with respect to some of the other numbers from an asset and liability. If you go to the next slide, please. This is a breakdown of your investment balance. Sorry, it's fine. So you have roughly $13.3 million of investments at December 31st. The biggest chunk of this is held in a high interest savings account, which has a fair market value equal to the cost value of $12.3 million. And the reason for that is you're basically holding cash. What you'll find is you do have smaller amounts inside a Canadian bond portfolio and a Canadian equity portfolio. Now, what you can see, council, is the blue bar is the market value and the yellow bar is the cost. Your market value of these investments really exceeds cash or the cost value. So you're up from a market perspective. I would suggest to you, council, that if you rerun these numbers at March 31st or today, it may look a little different. And all kidding aside, I don't look at my investments anymore because it just hurts. What I would say, though, is the province of Ontario has established guidelines with respect to what municipalities can invest in. When I look at your investment profile, it is very clear, council, that county has taken the decision that you don't really want to risk taxpayer money in the market. So I will tell you, holding the significant portion of your investments in a high interest savings account, given everything that's happened over the last 3 months, makes you a smarter investor than I am. And it protects you against that downside market risk. And it is important because it does materialize. And all kidding aside, you look at the markets, they lose 5% a day. And given that these are taxpayer funded dollars, very prudent of you to hold it in the investments that you have. And so that prudence, if you go to the next slide, please, is something that has been repeated since at least 2019. When you look at the market value of your investments compared to the cost in yellow, market in blue, you really haven't had any significant losses, despite the market turmoil that you're seeing today, despite the market turmoil that was occurring in 2020 with the pandemic. You've managed to insulate that. So I think, when I talk about fiduciary duties of council and municipality, and it's the stewardship of public funds, you've really done a good job of safeguarding against that, for what it's worth. So next slide, please. We mentioned your accounts receivable, and this is a breakdown of your accounts receivable on a year-over-year basis. The blue bar is last year. The yellow bar is this year. As we've mentioned, there's been some changes. At the bottom, you can see your HST receivable is down. That is primarily driven by when you're spending your capital. You can see funding from the Ministry of Natural Resources down. That's the flood funding, flood protection funding that we talked about, present last year, not present this year, and a variety of other receivable balances as well. Similarly, when you go to the next slide, slide 7, this is a buildup of your accounts payable. What you can see is that, consistent with the discussion we just had, the biggest component of your payable is the amount due to the County of Peterborough for County Road 503 of roughly $1.4 million. There are amounts owed to the City of Kawartha Lakes. They provide a component of your human and social services, Ontario Works, for example. And so because of that, there are requisitions that are outstanding for that. There is paramedic funding that is outstanding under the province's model for the community paramedic program. For example, it's 100% funded, but you need to spend the money in order to earn the money. And in some cases, you're underspent. So that funding is repayable. And then a variety of other amounts that build up your accounts payable. So next slide, please. Looking at other items in your financial statements, you'll notice that for deferred revenue, there's an amount of $427,000. Last year was zero. This is OCIF funding, or Ontario Community Investment Infrastructure funding. It's a multi-year funding program that the province provides you for infrastructure. You do have the option of not needing to spend it in the year you receive it. Rather, what you can do is you can hold on to it, you can bank it, and then you can build it up to fund future projects. So last year you used up all of your OCIF funding. This year you've held it for future projects. And this is very similar to how you would use gas tax as well, recognizing the gas tax flows through. You can see your long-term debt, which are debentures and other loans that are issued by the county, has gone down by about $796,000. This is the amount of principal repayments that you've made on the debt. So there is no new debt that has been issued in 2024. What you'll find is that the interest rates on your loans will vary. They'll go from 1.38% to 4.24%. So when I talked about investments and I talked about market conditions, you can see market conditions inside your debt portfolio as well, because your older debt has lower interest rates than your newer debt because interest rates have been rising in the past. And we've seen some municipalities that are issuing debt last year and this year that are now paying 6, in some cases, 7% interest on long-term debt, where they used to pay 1.5% to 2%. So it is market conditions that are impacting municipalities overall from an interest perspective. In addition to the roughly $800,000 you paid in principal, there is about $284,000 paid in interest expenses as well. So the most significant number on your financial statements is your tangible capital assets. And this is the county's investments in infrastructure. These are your roads, these are your ambulances, these are this building, for example. And as we've mentioned in the past, Council, when you buy an asset that's long-lived, you put it on your books and you amortize it over time. So additions make this number go up, amortization expense makes this number go down. So during the year, your tangible capital assets, or TCA, as the accountants will call it, dropped by roughly $1.3 million. There was about $4.6 million of additions during the year, which brings this number up. And offsetting that is roughly $5.9 million of amortization expense, which brings this number down. And if you go to the next slide, please, what you can see is this is a summary of your additions for the year. The biggest additions, and it is a bit of a recurrence of a theme, is with respect to your roads. So the $1.4 million on the shared road project with the County of Peterborough for County Road 503, improvements that you've made to County Road 19, County Road 1, and then a variety of vehicles as well and other additions build this up. Unlike a lower tier or a single tier municipality, there's aspect of municipal infrastructure that you don't have because you don't provide the service. So things like fire trucks, things like arenas, things like playground equipment. So the mix is a little different and it's much more limited because the scope of services of the county is much different than a lower tier or a single tier municipality. So if you could move to the next page, please. So the next statement in your financial statement package is the statement of operations. And this is a summary of your revenues and your expenses for the year. So during the year, your total revenues have gone up by just under 2%, or about $550,000. And there's a number of things, once again, that pull this number back and forth. Your municipal levy has gone up by roughly $1.2 million. And this is the taxes that you requisition to the lower tiers to collect on your behalf. Offsetting that is lower levels of government grants of roughly $1.5 million. And what you'll find in municipalities, both upper tier and lower tier, is grant volumes will move up or down depending on your capital activity. So if you have a big year with capital projects and big capital grants, the number goes up. If you don't, the number goes down. And as we've discussed, Council, there's over $400,000 of OCIF funding that last year you recognized, this year you deferred. So that's an example of this. Your investment income is up by roughly $97,000, and then your user fees and service charges are down by about $200,000. We'll talk a little bit about each of these components in a couple of slides. Your total expenses have gone up by about $800,000 or 3%. I do want to point out, Council, that the contribution that you made over 2 years for the CT scanner, we've presented below the line. And so what you'll find is in the financial statements, we calculate your surplus above the line, and then the contribution to the foundation is shown separately. Part of that is to distinguish that from what I would call other county operations or other municipal operations, because it is something that's unique, it is something that's different, and it is something that really doesn't relate to your operation of county infrastructure and county surpluses. So we have had the conversation with your staff about the appropriate disclosure of this. This is something that we see in other municipalities because what it allows you to do is to isolate something that, while it's paid for by the county, doesn't really relate to your core services, for lack of a better term. From an overall perspective, Council, you'll see that your financial statements have a total surplus of about $800,000. This is the second time I've said, actually, this is the third time I've said this in 2 days. And I can appreciate this may sound weird coming from your auditor, but I would tell you not to put too much weight on the surplus that's in your financial statements. And the reason for that is because there is a significant difference between how you budget and set your tax requisition versus how we accumulate your financial statements for reporting purposes. And I'm not telling you to ignore this number, but what I would suggest to you is this is not a true indication of what your surplus is. And the reason for that, council, is because people may look at that and say, you raised $779,000 too much in taxes. That is not how you should interpret that number. Okay, so just to provide some additional details, if you go to the next slide, please. This is a buildup of your grant revenues, and it's a 3-year grant revenue cycle. So 22, 23, or 22, 23, and 24. You can see far and away your largest source of grant revenue is with respect to your land ambulance program. So land ambulance is actually comprised of 2 programs. There's your, what I'll call, traditional land ambulance program. The province of Ontario funds 50% of eligible costs up to the approved budgetary amount. Anything above and beyond that is yours. And then there's the community paramedicine program that is funded 100% up to approved budget amount. If you don't spend it all, it goes back. And so what you can see is this is roughly $4.4 million this year, down from last year. It really does fluctuate with respect to your expenditure perspectives. OCIF is that capital funding. You can see you had it last year. This year, because you chose to defer it, it doesn't show up. And then a variety of other grant programs as well. You can see the gas tax. This is a program, the federal gas tax, which is now called the Canadian Community Building Fund, where you're allowed to bank it as well. So the big drop from 22 to 23 isn't because they cut your funding. What they did was you built up 2 years worth of funding and then used it in 1 year. The next couple of years are your individual allocations. So just to build up with respect to your grant revenues, if you go to the next slide, please. This is a buildup of your user fees, and you can see the changes here. The biggest changes that you'll find on a year-over-year basis is municipal recoveries are up. There are recoveries from the lower tiers with respect to IT services, also some bylaw enforcement and property standard rules. Building rentals are down. Ambulance fees are down as well. And this very much goes based on usage. And then also a significant drop with respect to WSIB. From time to time, Workplace Safety Information Insurance Board, WSIB, will provide you with rebates. So in 2022, there was a rebate. In 2023, there was a rebate. In 2024, they announced a rebate, but it's not going to happen until 2025. So when we show you this graph next year, what you'll find is there'll be a WSIB rebate associated with there as well. So next slide, please. From an expense perspective, in your financial statements, we disclose them by type in a supplementary schedule at the back. Your biggest single expense is wages and benefits. It's up about 3% from last year, which is typically the going rate with respect to wage settlements. What you'll find is different municipalities, depending on services and service vehicles, will have different levels of salary costs in comparison to the total costs. So for example, and I'm going to hop out of the county for now, but from a lower tier perspective, policing costs will drive salary costs if you have your own police service versus OPP. How you manage your water and wastewater systems, if you use the Ontario Clean Water Agency versus your own staff, will drive your staffing costs as well. What you'll find at the county is one of the biggest things disproportionately from a staffing perspective is your land ambulance program. So as members of county know, I'm from Northern Ontario. In Northern Ontario, we don't have counties. So in order to deliver social services, we have district social services administration boards, DSABs. And so some deliver land ambulance and some don't. And when you look at their financial statements, the level of salaries differs significantly. And so it's important, council, to look at this and to recognize that because half of your expenses are spent on personnel, doesn't mean you're overstaffed, doesn't mean you're inefficient. It just means that given your service model and your service delivery model, you're going to be heavily weighed towards salaries because you do land ambulance. And this is where it's important not to make too many comparisons at a high level because you'll draw the wrong inference from it. Materials and supplies have actually come down. I know this is going to sound weird talking to people on, is it day 25 of an emergency, but it was actually a milder winter this year than last year. So across the municipal sector, what we're finding is materials and supplies costs have come down because of climate conditions. You'll find there's a number of transfers to other organizations. And as we've mentioned, Kawartha Lakes does provide social services for you. So you transfer out to them, and then amortization expense, which is the write-off. So a bit of an overview of your operating expenses for the year. If you could go to the next slide, please. So when I talked about your financial statements and I indicated to you that the surplus in your financial statements needs to be taken with a grain of salt, this is the slide that I was talking about. And so what you will find on this slide is we've taken your reported financial surplus at the top and we've adjusted it to reflect how you budget. So inside the financial statements, there's a variety of expenses that are deducted that you don't actually budget for. Amortization expense would be the biggest one. And then inside your budget, there's a number of expenses that you budget for that don't get expensed in your financial statements. So capital additions, for example, capital expenditures are reflected as an expense in your budget that factors into your tax requisition. In your financial statements, they don't go into the surplus because we capitalize them on your balance sheet. So for this reconciliation, we've deducted that. Similarly, your surplus reflects interest on long-term debt. It doesn't reflect principal on long-term debt. So we have to deduct that as well. So when you look at this, you go from having a surplus of about $780,000 for the year down to a surplus of $1.3 million. And so you may sit there and you say, well, Oscar, the surplus got higher. And the comment that I would make and the caveat that I would make is the reason why this works out is because there was a timing difference on a capital project. And so from a capital expenditure perspective, you're actually $1.1 million under budget this year. That's not that you're not going to spend the money. It's just the timing moved into next year. Once I adjust for that, council, what you find is you have a surplus of about $213,000 before reserve contributions. And to put this in perspective, this is 0.7% of your revenue. So a couple of comments that I would make from this. One is, while that's not break even, that is awfully, awfully close. The fact that this number gets to that small percentage, and not just this year, council, but over each of the last 2 years preceding this year, tells me two things. One is your budget process works because you're not throwing off big surpluses or big deficits. The second is that oversight of financial results in year by your staff works because you're clearly not experiencing runaway surpluses or deficits. And to give credit where credit is due, financial oversight provided by council works. So when I mentioned your investment and prudence and stewardship of government funding, that's from an investment perspective. I would suggest to you in terms of how you manage your day-to-day finances, this slide shows me that you're doing that as well across the board because you're not running up deficits. You're also not running up huge surpluses, which could expose you to the question, are you raising too much in tax? We don't see that. If anything, this tells us that your processes and your systems work. So bit of an interpretation with respect to your financial results. And just to provide some additional perspective, council, with respect to your results, if you could go to the next slide, please. This is a historical overview of your financial performance. And I'm not going to get into this in too much detail for the benefit of time, but what I really want to do is I want to draw your attention to that red line. So that red line is basically your adjusted surplus or deficit. And what you'll notice, council, is this trend to operate at near break-even results without having significantly higher surpluses or significantly higher deficits really has continued over the last 10 years. So this concept of stewardship and effective oversight and effective budgeting is something that we've seen over the long term in Haliburton County. You'll see a bit of a peak in 2020. Just a reminder, that was the pandemic. There was nothing normal about that year. So next slide, please. This is a summary of your capital additions. And so the red line is your capital additions. The dark blue bar is capital grants that you receive. The yellow bar is debt financing that you receive. And the gap between the two is your contributions at the county level. So this includes allocations from your taxes, from your reserves, and user fees as well. Part of the reason why we put this up is some municipalities won't actually spend capital unless they get a grant. What you can see is that within your budget, there is a component assigned to capital financing that you could use. And once again, this is what's tossed up the surplus this year, because if the timing of a project changes, that money is still going to be available. So next slide, please. From a financial position perspective, on this slide, we've summarized in yellow your cash and cash investments. We've also summarized your reserves and reserve funds. A couple of messages that we can see here. One is you're in a position where your cash balances actually exceed your reserves and your reserve funds. And I will tell you, council, I can't say that for all of my clients. And so there are some cases where municipalities, from a financial perspective, it's almost like being house rich, or maybe it's house poor, where I own the house, but I have no money. So they have the reserves and reserve funds, but unfortunately, those funds don't actually exist. So their financial reserves have been compromised. That isn't the situation here. You actually have more in cash than you have in reserves. And that's just a timing of making sure you have the deferred revenue and money set aside for capital as well. From a reserve perspective, what I will say, council, is that the number really hasn't changed much in the last 4 years. And so we've had this conversation in the past, and I want to make it very clear, it's not my place to dictate policy or strategy to council. This is just from an informational perspective. If you were to stop me after this meeting and say to me, Oscar, is there something that from a council perspective I may want to look at? I would suggest to you it's your reserve balances. So next slide, please. So these are your reserves from an absolute amount. And for the purposes of comparison, we've compared you to every other county in Ontario. And I do want to say, council, this is not a fair comparison. Essex County has $331 million in reserves because they have 500,000 people who live there. So we put this just to show the amount. You show up with $8.4 million of reserves. When we start to adjust for size, though, is where we get into the next slide. So this slide shows your reserve and reserve balances per household. And what you'll find is, if you accept this as a measure of adjusting for size, on a per household basis, you have the lowest level of reserves in Ontario for counties. Similarly, next slide, please. If you look at your reserves and reserve funds as a percentage of your tangible capital assets, you're not the lowest, but you're on the low end. And part of the reason why we look at $1 of reserve for $1 of TCA is because oftentimes reserves are used for capital financing purposes. But also, if you go to the next slide, these are your reserves and reserve funds as a percentage of your total revenues. And partially what this tells you is, how much do you have in the bank? What do you have from a financial resources perspective to be able to sustain an unexpected revenue loss or an unexpected one-time cost? And I mentioned the ice storm. One of the things that we are seeing is, with climate change, the severity and the cost of climate-related weather issues is becoming more and more pronounced and more frequent. And so what's interesting, I've been doing this for 34 years. 34 years ago, nobody was talking about pandemics. Nobody was talking about ice storms. Well, we used to laugh at Toronto because they called out the army, and I remember once in Ottawa. But what you're finding now is issues around climate-related change weather conditions that cause flooding, that cause freezing, are becoming more and more pronounced and more problematic. And so what that means is, from a cost perspective to municipalities, you're going to see those pressures come in. Having reserve balances gives you the ability to absorb those without having to go to your residents, or in the case of the county, your lower tiers, and say, I need 12% because I need to pay for X. So the short answer is there's a significant variance between you and the rest of the province. I'm not expecting that you would, I'm not suggesting, sorry, that you should try to fix that in one budget cycle. But what I would encourage council and staff to do is, when you're looking at your long-term financial planning and your long-term projections, give some thought to the sufficiency of your reserves, whether you have enough and whether you have the right types of reserves for what you need. Oftentimes, people think of reserves exclusively for capital. We're suggesting to our clients now that what you really want is, you want operational reserves as well, to be able to deal with one-time costs that pop up. Council, in order for this to work, it's interesting. I mentioned, I said something yesterday. I had this exact same discussion with a client, and they said, well, should we raise our levy? And I said, no. I said, because you don't have a reserve policy. You don't have a long-term financial plan. You could raise money for reserves, but you don't know what reserves you want, how much you need in each specific reserve, and what you're going to use them for. So what you need to do is develop that policy environment first, because otherwise, as the county, you're going to go down to the lower tiers and ultimately your residents and say, we want to build up our reserves. And when somebody asks you for what, you need to be able to answer that question. So this is where I would encourage your staff to come forward from a budget perspective with a bit of a longer term plan with respect to reserves. I would just say, council, from my observation, this is the only thing that I would suggest actually needs attention from a financial performance and a financial position. I think the county has done a remarkably good job in very trying times. My concern is your reserve balances and how well you're set for the future. So, and this isn't telling you what to do. It's just observations from your honors. So, Warden Burton, members of council, I'd like to thank you once again for allowing us the opportunity to be here. I will say it is nice to be here in person. So thank you for hosting. That does conclude our presentation. It is a pleasure and a privilege to serve as the county's auditors. So thank you for the opportunity. If there are any questions, more than happy to answer them at this time.
Thanks, Oscar. Questions? Murray?
Notice our neighbors there, City of Kawartha Lakes, they're not on that list of, and the other question I have to ask you, it's great to have reserves, and I agree with you. But you don't see the debt on the other side. And I do think there is a comparison there, there's a connection.
Yep.
So I could owe $50 million, but I got 15 million in reserves. What happens if the interest rates keep jumping up, and you can get in a mess that way too?
Yep. Through you, Warden Burton. So 2 questions. We didn't include Kawartha Lakes because Kawartha Lakes is a single tier. So from a jurisdictional perspective, we don't use them because they do things like fire and parks and rec and stuff like that. The concept of debt is a good question, because the short answer is, if I have no debt and I have no reserves, that's probably better than having lots of debt and lots of reserves, or it's the same position at least. If you would like, I'm very happy to rerun this calculation to show debt and to calculate a net position. So reserves minus debt, to see what that looks like. Happy to do that.
Good.
Other questions? Councillor Carter?
Yeah, further on the reserves, I think that's a good point on the debt, because, we are in a position where we could acquire funds very, very quickly through Infrastructure Ontario for those unexpected events and so on. The other thing that is difficult, and you would have to do much more analysis on this, is you know, we're in a situation where some of our townships have twice as many households as we have, you know, people. Because of the cottages. And so when you do a number per household, you know, is that really an apples to apples type of comparison? So I think, you know, one would have to, you know, delve into this a little more deeply before you can draw some conclusions. I'm to a certain extent, reserves are kind of wasted money in terms of you're holding a whole bunch of money for that rainy day. If there isn't a rainy day fund out there through borrowing or whatever, that could mitigate it. So it's just, you know, it needs to be a much deeper analysis before you make any radical decisions or changes.
And I think, you'll recall from my time in front of your council at Minden Hills, the comment is there's no perfect comparators. And there really is no perfect comparator for Haliburton because of size, and also because of the seasonal nature of it. But at the end of the day, it's perspective. To your point about the debt, there is the ability to go into debt. It's interesting what we're starting to see is the province of Ontario limits how much municipalities can borrow. And what's interesting is for the first time in my career, I'm seeing municipalities start to bump up against that limit. And part of the issue is they're funding a new arena, and admittedly single tier, a new arena, a water treatment plant, a long-term care home development, a roads project, and a new fire station. And what happens is they bring us into the conversation and they say, can you help us understand the debt servicing and what this means? And what you quickly realize is it's like being at the grocery checkout line and saying, I need to leave something behind. They literally could do 4 out of 5 projects because they've run up against their debt limit. So I do appreciate that debt is an available option. And what I would suggest is from a long-term financial planning perspective, we would always suggest to our council, and much to your point, you can't look at reserves in isolation. What you actually need is you need a capital financing strategy that says capital financing is going to be funded through debt, through reserves, through development charges, through grants, what have you, and mirror that all together. Admittedly, debt financing is an option. I would suggest to you it was a more attractive option 3 years ago as opposed to today, but it is still very much an option. And from that policy framework perspective, I would agree with you. You can't just look at reserves. You need to look at all of these pieces. And we actually have some examples of policy wording that if we haven't shared with your staff, we can.
Councillor Dennison.
Thanks very much, Oscar. I really appreciate the love of it. Thanks very much, Oscar. I really appreciate the level of detail that you've given us in your overview. I particularly appreciate the comments that you've made about reserves and the level of our reserves. It's always been a bit of a bugaboo of mine that we have sufficient reserves to go forward. So I really appreciate that.
Councillor Rob.
You know, again, I guess reserves is the big question that we're all going to be talking about. The last couple of years, we have deliberately added a percentage to our budget to deal with infrastructure and the whole complex mess that could be coming down the road, especially when you look at the kind of weather that we've had recently. Bearing in mind that and what it could cost going down the road, do you see that as being a positive move towards making sure our debt, future debt, does not get overcome because of lack of planning in today?
Through you, Mr. Warden, I would suggest that is a positive step. There's a number of municipalities that have come out with the concept of a capital levy. So they add 1% to the levy specifically for capital. And they do it over multiple years. So this year you raise 1%. Next year you technically raise 2% because it's this year's 1% plus next year's 1%, what have you. I think what you're finding, and I'm not trying to be flippant when I say this, I don't care who you are, capital is a problem. And problems for municipalities for 3 reasons. One is Everybody has a built-up infrastructure deficit that has come from consistent issues around how much you've funded, and just the fact that you've got more infrastructure reaching end of useful life now because everything's older. So that infrastructure deficit creates pressure on municipalities to invest. The second thing is the rate of inflation. And the people talk about the consumer price index as inflation for municipalities. I have a different view on that because you're not buying apples and you're not buying cigarettes or whatever goes into CPI. You're buying asphalt, which is a petroleum product. You're buying unionized labor, stuff like that. The Statistics Canada publishes what's known as the non-residential construction price index, which is inflation for non-residential building indexes, which I would suggest you include municipal garages and museums and stuff like that. Over the last 10 years, that's 7.5% a year. And so the concept of saying we're going to increase by 1% or 3% isn't going to keep track with inflation. What I would also suggest is it's not just inflation and pricing, it's the ability to get people to do capital projects for you. And my experience has demonstrated over the last 2 to 3 years in smaller, in rural and northern communities, oftentimes you will do all of this work to get Class D cost estimates to say that my arena is going to cost me $47 million and the bid comes in at $77 million. My long-term care home is going to cost me $90 million and the bid comes in at $125 million. And if it sounds like I'm comfortable with these numbers, it's because I've seen those are real examples. And so the important part that I would suggest, and I don't know if this is the case, I would need to talk to your staff about this, but that building that's being built in Barrie, if you built it here, is going to cost you more. And it's going to cost you more because you're here, not because you're Barrie. So all of these challenges, I would suggest to you drive the need for capital. The fact that you guys have added it, very much positive, and somebody could probably make the argument that it should be 5%. But balancing that is the concept of affordability, because you're not the only one experiencing inflation. And, to Councillor Carter's point, one of the particular issues in municipalities, much like Haliburton County, those that have high seasonal populations, is, and I'm oversimplifying this, Councillor, but you have 3 types of residents. You have the residents who live in the big houses who make a lot of money in Toronto, and, their taxes, it's like their cell phone bill. I pay it. You have, and I'll use the example, you have school teachers from Toronto who've inherited a property that's been in the family for 4 generations, but they can't afford it. And then you have the residents of the town who don't make what somebody from Toronto is making. So from an affordability perspective, it's nice for a guy like me to stand here and say you should add 5%. Somebody's got to pay that. And that's where the balancing comes into play. The nice part about reserve strategy is it avoids shocks. Rather than saying I need 10% or 2% or what have you, it lets you smooth that out. To Councillor Carter's point, a debt strategy lets you smooth that out as well. It's just a question of whether you're prepared to pay 5 or 6% in interest costs. So these are all the factors that come into play. I would suggest to you the moves you've done in the past have been positive. What I would suggest to you is you can't sort of take your foot off the gas because inflation's going to eat you before you know it.
Councillor Dave?
Thank you, Oscar. As always, this is extremely insightful and interesting, so I really appreciate your time, and it is great to see you here in person. You referenced the non-residential construction inflation rates over the last number of years. Off the top of your head, are you able to compare that with the residential construction inflation rates?
No.
No.
I'm sorry, and I haven't. So I'd
Okay.
have to look.
Do you know if is it higher or lower, or would we have to go? No.
I'd have to look, to be honest with you. And Councillor, I could see the Statistics Canada webpage. There's a little box that you have to toggle to do residential, non-residential. Because I do work in municipalities, I do non-residential.
Any other questions? Resolution?
That presentation for Russell Poloni of KPMG regarding the audit of financial statements for the year ending December 31st, 2024 be received. And further that the 2024 audited financial statements be approved as presented.
Someone move. Councillor Carter, second by Councillor Rao. All in favor? It's carried. Thank you.
Thank you very much.
Thanks, Oscar. Consent
This was
agenda.
Yeah, this was that the items listed under the heading consent agenda as amended for April 23rd, 2025 be adopted as presented.
Did anyone want anything pulled from that, by the way? Could I have someone move? Councillor Dayu, second by Councillor Rao. All in favor? It's carried. Human Services. Consolidate Municipal Service Manager, City of Kawartha Lakes and Haliburton County.
Excuse me, Michelle, was Cheryl connecting virtually? Are they in the waiting room? Okay,
Please.
ma'am, please.
Cheryl.
Can you hear me? Hello, it's Cheryl Faber.
Yes, we can hear you.
Okay, thank you, Warden Burton. And with me today, I've also brought Manager Janine Mitchell. So first off, just wanted to start off by saying thank you for the ability to bring this forward to Haliburton Council. And I also, noting the last couple of weeks, I wanted to acknowledge the efforts of you and many of your staff, given what we've traversed with the ice storm and certainly the current recovery. As we start, I also wanted to just acknowledge for your sake too that this is Miss Janine Mitchell's last meeting with the county, as she has her upcoming retirement closely upon us. I think she probably has the number of sleeps counted. We wish her all the best. And with that, we have hired a new manager. And Miss Allison Truax has onboarded with us just as of last week. And she's coming in from the region of York, but is a resident of the city of Kawartha Lakes. So it's almost a coming home for her. So just a few pieces to update you with as we start the presentation. So as we had shared when we presented the 2025 budget to council, both CAO Dyke and myself are working towards getting key components of the work of the Consolidated Municipal Service Manager to council. And I wanted to note that there was a fulsome presentation and conversation on this 4-year social services service plan given by Manager Mitchell at our Joint Advisory Committee on Housing and Social Services in February. Councillor Dayu, Carter, and Rael were all part of that meeting. So with that, maybe Janine, I'm not sure, Warden Burton, how you wanted us to present this. Did you want Manager Mitchell to give just a quick overview and then open it up to the floor for questions, or what would you prefer?
Sure, that would be fine.
Okay, Manager Mitchell, I will hand it over to you.
Okay, thank you. As Cheryl mentioned, thank you for allowing us to bring this forward to this group. I also want to say on a personal note that it's been my extreme pleasure to have worked with the County of Haliburton for 25 years, representing and being a part of that community. It has been meant a lot to me, and my husband and I are planning to hopefully be a permanent part of that community at some point in the future. So maybe I'll be attending council meetings for a different reason. I just wanted to explain about the report itself. The service plan that we do, the ministry, prescribes basically the template and the information they're looking for us to provide. It's really just a high level from the provincial perspective. It's a high level, quick look at what's happening in both of our communities, what we think about what's happening in the communities, and what we're going to do about what's happening in the communities. And all of this is completed within the context of the 800 rules and regulations we have to follow in the delivery of the Ontario Works program. I say that because where we've identified issues and concerns, there's only certain areas where we have flexibility. So for example, our flexibility is limited to how we provide service and within our admin funding envelope and how we provide discretionary benefits, once again, within our funding envelope. But the funding itself, how we administer it, and the rules and regulations about who's eligible and how much they receive, that's all mandated by the province. So we do our best within that box to provide services to meet the individual needs of everyone in our community. The plan itself to the province that you'll see there, it doesn't divide up the information as much, comparing the city of Kawartha Lakes to the county of Haliburton. The province is really looking for what our information is as a consolidated municipal service manager. I can assure you, however, that we have detailed information about each community within our area. We do a number of reports and data analysis so that we can do that work. We have information about the income levels, employment and labor, and very specific information about the population and where those pots of population may be living. We have information specific about barriers that would be faced more so by people in the county of Haliburton compared to people in other communities. So we really are very evidence informed. We use that information. That information tells us the what. And then we need to analyze that information to say, so what about that information? And then we have to plan, well, now what are we going to do about that information that we have? We also do have staff who are engaged locally in the county of Haliburton through various committees and meetings, and we try to have maintain that presence in the county as well. We identify specifically the barriers that happen in that people may face in the county of Haliburton, and we work with service providers in the county of Haliburton as part of the team to try and support people through moving past those barriers. So this plan the plan that you see is very high level. However, our planning on our end is very detailed and very specific for different areas. I'm happy to take any questions if there are any questions for me.
Questions? Councillor Carter?
Hi. One of the difficult things in all of these programs, of course, is having we seem to have an endless supply of people in need, but we do not necessarily have the staffing to be able to handle the volume. Could you explain a little bit and how the money comes from the government to pay not only for the services but also for the staffing and admin?
Absolutely. So we get a set funding envelope. The funding to support the administration of the delivery of Ontario Works, there's two separate areas. There's an amount we get from the province that's 50-50 cost shared between the province and the CMSM, and that is in the admin budget. There's additionally 100% provincial dollars within that funding envelope for us to support the delivery of Ontario Works. The 100% money is really intended to provide direct services and supports for the people we serve. So it's a balance of managing all of that funding. We received a small increase of $71,000 for 2025. That was the first increase we received in this area since 2018. So we continue to provide services and as you say, are serving more and more people in receipt of Ontario Works with the same number of staff. We do a lot of work and data. So we do time studies. So we take a look at how much time it takes to do the work, how much time it should take to do the work, how many of all the different tasks, how many tasks that we do in a year, how many staff we have, how much staff time we have, so we can basically calculate how many people we should have in order to do the work that we do. And we know that we, right now we have 20, I'm going to speak specifically just to narrow it down, specifically the people who work directly with the people we serve. We have 21 people who work directly. We know in order for us to really be able to have more capacity to do the intense work that's needed to support the people we serve, we know that we need an additional 7 CSWs in that role to do that work. Excuse me. And we know that the province isn't, they initially had indicated they were going to look at the funding formula for 2025. However, that has now fell silent, and we have not heard anything further related to that for 2026. How we calculate the amount of people we need is also based on the needs of the people we serve. And we know that the needs of the people we serve are getting more and more intense and more complex based on the community. When people are, the majority of the people we serve come back to us to say that the barriers are housing and that they don't have a place to live and they can't afford to have a place to live. If you're a single person, receipt of Ontario Works, you're receiving $733 a month. The average cost for to even have a 1-bedroom is $810 a month. So leaving them no room for anything else. We also know other barriers include transportation. There's physical and mental health needs. So we are aware of all of the barriers. It's very difficult when 96% of the funding that we do have to go to support individuals is primarily being used to support them related to their housing needs. So it doesn't leave us as much room as we need to support them in other ways. One program we are offering is we are using a doctor to complete vocational assessments so that we may be able to get, we can serve about 50 people a year to help them intensely get some more of that support that they need and to help them with their application for Ontario Disability Support so that they can at least increase their income and get them in the right program to meet their needs. So those are some of the things we're doing. We do advocate on a regular basis to all provincial ministries and groups about the needs of the people in our community and about our needs for staffing. And we have the data to back up our claims for the people that we need to provide those services.
Other questions? Resolution?
That report, HS 2025-002 Social Services Service Plan 2025 to 2029 be received, and further this report be submitted to the Ministry of Children, Community and Social Services as required.
So on the move, Councillor Ferry, seconded by Councillor McKechnie. All in favor? It's carried. Thank you.
Great. Thank you, folks.
Corporate Services, Finance. Andrea.
Good morning, Warden and Council. I'll start by apologizing for bringing this report after the audited financial statements, but Mother Nature had different plans for our April 9th meeting. There is a lot in this report, so hopefully I can capture the high level for you. Overall, as of December 31st, the county had collected 99.13% of budgeted revenues, 97.43% of operating expenses were incurred, and 80.84% of capital expenses had been incurred. There's a number of items I've highlighted within my report that I want to bring to Council's attention. Within our revenues, we did have an above average year with the tax supplementaries and write-offs. Supplementaries are extra property taxes that may be added during the year, such as new builds or renovations. These are provided to us here at the county from the local municipalities during the year-end process. 2024, the county received $235,000 in surplus revenue. As Oscar mentioned, we did defer $427,000 of our 2024 OCIF funding to 2025. So that's not shown in the final revenue line, and that is being used for the Potash Bridge project. $364,000 of unspent community paramedicine long-term care funding at year end has been utilized in 2025 prior to the March 31st deadline. User charges saw unbudgeted revenues in ambulance with cross-border billing of $126,000 and surpassed budget targets with land division fees of almost $26,000. As previously reported to council this year, our investments were very successful in 2024, providing approximately $480,000 of surplus revenue. Staff did well with asset sales this year, surpassing budget targets by almost $15,000 with the sale of 3 pickup trucks, an administration van, a tandem, and a loader. Highlights within our expenses to bring to your attention. The rail trail, as you're aware, it was part of your Q2 and 3 financial reports, noting 3 major culvert washouts, along with multiple storm cleanups. Overall, the rail trail finished the year with being $109,000 overspent. As anticipated within your previous reports, the director was able to monitor these extra costs over the year and offset them within their overall roads maintenance budget. County Road 21 and Hops Drive, an unbudgeted project that has been previously reported to council with an original estimate of $240,000. As of year end, this project had a total cost of $113,000 with an additional $3,000 anticipated in 2025 to finish the project. The director was able to cover the unbudgeted expense within the 2024 capital budget, and work plans have been adjusted for 25 accordingly. For social services, as of when I wrote my report, we had not received the year-end reconciliation or invoicing from City of Kawartha Lakes. So to finalize the year-end, an accrual was set up based on budget. I have since received the treasurer's year-end reconciliation with the invoice to follow, noting a year-end deficit of just over $75,000. The county was made aware of a rent supplement issue after our 2024 budget was passed, anticipating a $40,000 unbudgeted expense. The actual was $36,623. The balance of the deficit is $39,000, is a combination of 4 capital projects that closed with deficits in 24. The 2 largest projects were the water system at 610 Mountain Street and various move-out repairs or renovations needed after tenants leave the units. Since 2024 is now closed, this will become part of our 2025 reporting, and I'll bring a report at a later date should a transfer to reserve be required to cover that deficit. Roads capital infrastructure had an unspent budget of approximately $470,000. The majority of the savings was reported to council in May 2024 and is the result of a successful competitive procurement process with net savings of $364,000. All roads capital infrastructure projects were completed as budgeted in 2024. Any projects or purchases that were budgeted for in 2024 but not completed have been identified within my report. These budgets were transferred to reserves at year end, and staff have identified anticipated completion dates in 2025. After completing audit, the county's finalized year-end surplus is $1,665,776. This does include the library surplus. All year-end surplus or deficit transfers are completed based on the county's reserve and reserve fund policy. There are 4 main transfers to reserves that make up the majority of our surplus. Almost $205,000 to the library reserve, and that's primary surplus within their wage and benefit line. approximately 295,000 to the winter maintenance reserve, as Oscar identified. Materials were down this year. This was a much needed transfer. It is recommended that our winter maintenance reserve target be 25% of the 4-year average of winter costs. This results in a target of approximately $465,000. Prior to our 2024 surplus entry, this reserve had a balance of 119. So this will bring us up to about 414,000. Almost $409,000 to the roads capital reserve, and that is due to the savings I've previously noted, with net any public works overages. And the remainder, 723,000, the net surplus transfer to the working fund reserve, which is primarily made up of the previously noted increased investment and supplementary tax revenue. And those are the highlights of 2024. And take a minute to thank Oscar and his team and my team for all the hard work in closing out another year. Well, I'm happy to take any questions.
Questions? Resolution?
I got caught off guard there. That report number COR 08/2025 Q4 financial report be received as information, and that all reserve transfers outlined in the report be approved.
Someone move. Councillor Carter, second by Councillor Dayu. All in favor? It's carried. Thank you. Okay, Public Works. So.
Morning, Warden, members of council. I have two reports I'm presenting this morning. My first report is in regards to the approval to award the purchase of two 2026 pickup trucks. The county and Algonquin Highlands collaborated on a request for tender for the purchase of a total of three pickup trucks. Two were county, one was for Algonquin Highlands. The request for tender closed on March 13th, where we received four bidders, four submissions were provided to the county. The proposed price was under budget, and staff are recommending accepting the lowest price that met all requirements. The budget was $136,000, and the recommended price, including non-recoverable taxes, was $119,750. So we had a saving of approximately $35,000. So it worked out well. I'd be glad if you'd like to answer any questions.
Questions? Comments? Resolution?
Staff report BWS 07/2025 approval to award the purchase of two new 2026 pickup trucks be approved, and further the bylaw be presented, authorizing the warden and the clerk to execute the purchase agreement with Curry Chevrolet Buick GM Limited.
If someone move, Councillor Danielson, second by Councillor Ferry. All in favor? It's carried. Approval of award service treatment project tender.
Yes, my second report is a recommendation to award and enter into agreement with Miller Paving for the execution of the 2025 surface treatment project. In 2025, the county, Algonquin Highlands and Minden Hills collaborated on a joint tender for the provisions of surface treatment to our roads. For the program this year, our roads are County Road 12, which is Livingston Lake Road, a section of it, County Road 4, Essenville Road, and County Road 20, which is Horseshoe Lake Road. The request for tenders closed on April 10th, where we received two bids. The proposed price came just over budget. The recommended Staff recommend accepting the lowest bid that met all requirements. The budget was 1.288 million. And the recommended price, including non-recoverable, was 2.324 million. So it was over budget by roughly $35,000, where we recommend taking the difference from our savings from the hot mix tender, which was just around $170,000 to cover the difference. And I'd be happy to answer any questions.
Any questions, comments, resolution?
The staff report PSW 08/2025 approval to award the 2025 service treatment project tender be approved and that the bylaw be presented, authorizing the warden and clerk to execute an agreement with Miller Paving Limited.
So move. Councillor McKechnie, second by Councillor Shell. All in favor? It's carried.
Thank you.
Thanks.
Thank you.
Economic development. Public transit update. Scott.
Good morning, Warden and members of council. So just in front of you today is just a staff report with a recommendation that we issue a tender for a public transit system. The scope of work is outlined within the staff report. Just a couple items to note as well. Obviously, we had the tender last year for a fixed route system. We did receive one bid that was fairly costly. Over the course of the fall, staff have been monitoring other systems that have been implemented in rural Ontario particularly. And what we've seen is we feel perhaps a demand responsive or on-demand service could be a transit solution for Haliburton County. In conversations with some of those jurisdictions as well, they did indicate that the costs, they have seen some cost savings just with vehicles not running on a fixed route system and being empty. It also, they felt in conversations with them, it provided kind of a better service option to get to kind of some of the more remote or rural areas in their jurisdiction. We based the scope of work on conversations that we had with council. I believe it was in December 2023, on starting basically as a pilot model with a service that would operate primarily between Haliburton and Minden. Just did want to make a note as well, because we have seen other examples, most recently in the district of Muskoka, that will provide an optional component if a bidder wanted to provide a proposal that would include all of Haliburton County, so that if it was brought back, it could be brought back in that manner, and we could explore that as well. It just wouldn't be limited to the geographic area between those two jurisdictions. Just outlined, we've had 2 shift dates on this, just given recent weather events. So most likely be trying to get it out mid to late May, have it open for about 3 to 4 weeks, and with any luck, have a summary of responses back to council in July. And happy to field any questions.
Okay, questions, Councillor Daniels.
Not a question. Not a question, but I applaud the continuation of investigating transportation services for the county. I would like to see the option included for the entirety of the county, just to see where we stand. But I do have to say that Algonquin Highlands is not interested in paying for a service that's only going to serve Minden Hills and Dysart at all. I think that needs to be explored, and how that's funded, if in fact something does come through that looks like a viable solution. I would suggest that possibly Highlands East might feel the same, given that they do have a partnership with Bancroft for transportation services. I don't want to speak for you, Mr. Warden, but that's just our position, that I just don't think that it's fair that we would pay for services that do nothing for Algonquin Highlands.
Gary?
If I might, your word, just to add to that, I think one of the options that we have, or the the benefits we have in the program that Mr. Oval's talking about, is we have the option now of going to the provider and talking about beyond just the corridor piece that we talked about before. Right. So there may be an option. I'm not saying it can happen, but to your point, I think we do have the flexibility to go in and look at how it could go beyond just that County Road 21 corridor. You know, it may not arrive at anything, but it's at least something we have the ability to look at.
Councillor Rao?
Yeah, I recognize the board, you know, the statement I can. And I agree with Councillor Henderson that, you know, there is great advantage to making this happen. There really is. It's the beginning of what could be a really good thing going down the road. Unfortunately, in this year, you get benefit from across our county. But what you're saying, if I'm not mistaken, is this is an opportunity for us to investigate, and that the payment of the actor will, whatever comes out of it, but I'm not hopeful that either Algonquin Highlands or Highlands East, unless we are somehow involved with it. And that is what we're intending on doing. I fully support it.
Any other questions? Comments?
Well, I'm going to say a mouthful here, but I thought we were elected to represent the people of Haliburton County, not to start picking and choosing how we're going to separate the funding. I hear what your concerns are, but there are other instances too where one township gets a benefit and Dysart pays more than it should. I could go through that, and this is going to happen all the time when it's levied at the county. So I'm just going to shut up, but I'm going to say, I want to say that I think it's not fair.
Bob?
Well, I think that, you know, whatever we try to do, in particularly in something as large as transportation, which I think most of us will agree is one of our key challenges in a rural municipality, is that it's got to start somewhere. And it's never going to get to the outlying districts unless it starts at the center. And, you know, if one wants to take a position that they have no interest in paying for something like that, well, then I think we have to look at almost every issue that comes before the county. And I would suggest that Dysart and Minden Hills probably pay for some things that, you know, affect the other two municipalities that maybe we don't like to pay for. So, you know, I think we have to look at whether we're here as Haliburton County or we're here as 4 individual municipalities. And we go from there.
Thank you for the comment. And anyone else? Gary?
Sorry, Councillor. I just want, Mr. Ogle can actually probably respond to Councillor Rael's comment regarding what we're asking for today.
Okay.
Through you, Warden, and happy, this is why I've got this in front of council. I know it's a broad topic. So if council wants us to modify the scope to look at the entirety of the county, I have no issue doing that. I want to get a proposal defined that will, you know, satisfy the needs of everyone at this table and the members of the community. And if I could just get you to perhaps follow up with me, Councillor Ryle, I was trying to make some notes. So just to clarify your question, and then I can answer that more clearly.
Go ahead.
I think the question that I'm asking is not so much the investigation of the overall program. I think the overall program needs to be investigated from complete east, complete west, complete north, complete south. But at the end of the day, as Councillor Danielson has said, when the rubber hits the road and we physically begin operation of anything that we do, we have to understand that although we are one county, and I have no problem with that at all, that the overall program, if it is going to be expanded across the entire county, what is the timeline? How is it going to work? Because at the end of the day, if we're going to be looking at a 10-year program that is only going to be benefiting the 2 municipalities, that to me is not a fair statement. There needs to be some kind of adjustment in the fee structure. On the other hand, if it is phase 1, that could be over a shorter period of time, then I'd like to hear what that shorter period of time is and what's involved with making it happen.
Gary?
Don't mean to jump in here. I think just put it from a contextual standpoint, what we're asking for today is, so we were tasked with the aspect of looking at a public transit system or model that could benefit Haliburton County. And that's what Mr. Ogle has brought forward. we're just looking for authorization to reintroduce an RFP that would look at that. And we could structure it fashion. Okay, here's what we're looking at doing initially. Is it possible? What's the potential to expand outwardly again? And if I may just step in and not taking sides in this, but I think from a community benefit standpoint, and I think Director Tiffin will back me up on this, is that yes, I get the initial piece would be the transit would affect directly at Minden Hills and Dysart. However, in our efforts to recruit doctors, in our effort to bring businesses into the area, in our efforts, all the things that build our tax base, it builds our healthcare system. These are the things that we're being told are needed within our community to make that attraction work. So yes, there may be a cost that you may not be getting 100% of the direct benefit from a service, but there also is the indirect benefit to the broader community with respect to your healthcare, with respect to the growth of the overall business side of it. And I'm not saying it's a one-to-one piece, but I think it's something at least getting us down the road so we have all the information in front of us. To Councillor Ryle's point, I think to your council point, Deputy Warden, is that let's identify how are we investing wisely in a service. And then we can talk about Councillor Ryle's point, how do we exactly pay for that going forward? So we're at kind of like step one of a multi-step process, just kind of getting our knowledge base built up as we move forward.
Councillor David?
Thanks. I think there is a pretty big difference between a fixed point-to-point service and an on-demand service. Fully appreciating that when we start, we got to start small and make sure that something works, and a point-to-point from Haliburton to Minden would make more sense. But if we're talking about a scope of work for an on-demand, virtually a virtual communication system, I don't see any reason why we can't start the conversation county-wide and put within that scope of work, tell us what it would cost and how it would work if it were just these two townships. Tell us how it would how much it would cost and how it would work if it was the full county. And then, we at this table have the distinct privilege of making that decision when we get the facts and figures. But let's start full county for scope of work is my recommendation, and then make our decision on the back of that rather than the reverse.
Councillor Dennison?
Yeah, I didn't want in any way to suggest that I don't support going forward with this, because I do. It's something that's needed in the county, and I would like to see it go forward. And I'm not suggesting that we change the scope of the terms of the RFP, but that there be an option included, just to sort of see where we stand and how we can look at it going forward.
Scott?
And just through your word, and trying to keep the report as brief as I can. You'll notice I think it's in the deliverables that it does outline what an implementation schedule is, and I didn't want to go into kind of every bullet as to what that would be. But to your question, Councillor Ryle, what that would lay out is kind of what does the first 6 months look like? What does the first 18 months look like? What does the first 24 months look like? And what are the costs associated with that? The challenge we've run into as staff is we've had some entities reach out to us about this, but just to keep us out of trouble and follow our procurement rules. I can't really have any substantive discussions. We've got to go out for tender, and happy to include that option. We've noted that. This provides us a starting point to build off of, and we'll make sure that what comes back is a detailed response that'll clearly outline and articulate not only where the starting point is, but where kind of the finished product would land and how long that would take.
Please.
I totally, first off, Scott, thank you very much for the way you're presenting this. I know you're kind of caught between a rock and a hard place when you're dealing with an issue that has to start somewhere and hopefully will lead to everywhere. But I also have to acknowledge what Councillor Danielson has said too, is we need to have some insight as to where this could lead us to. And at the end of the day, I totally support, I can't say it again, the whole idea of investigating this. We need to do it for all the reasons that everybody has said. We need to do this. But at the end of the day, before we start buying equipment, making leases and all kinds of wonderful things like that, we need to know where the actual benefit and costs are going to fall. And once we do that, then we have a better idea of where we're going. That's all I'm saying.
Okay. Councillor McKechnie?
Yes, Scott, I like the number 685,000. Of course, that was only one bid. I mean, that's our starting point kind of for Minden to Haliburton. Of course, I'm all in favor of a transit system throughout the whole county if it's possible. But boy, we're looking at a lot of money, I think, if that's the cost from Haliburton to Minden to Haliburton. I think, it'd be great to find out exactly what that number is gonna be, but I think we're talking about a lot of money here. And of course, we need it for sure, but the people who really need it, I like, there's gotta be some way that we come up with a system where there'd be, it wouldn't be as big as what we're talking about. We couldn't have runs every, like, the amount of times that the pickups are gonna be, the scheduling of this, like, to start off with, it couldn't be something like not 24 hours a day, but 12 hours a day or whatever. So I'm like, that number just scares me right off the bat, and to have the whole county involved now even scares me more.
Through your word and just, yeah, a point of clarification. So that was the response to the previous tender. It was really specific. It was a service that ran between Minden and Haliburton. I think it had 4 stops in each community. I think it ran 6 days a week for 8 to 12 hours a day. What we've learned through our research, and again, I think Wellington and just for a neighboring municipality, Muskoka, that the demand responsive option could provide, I think, a service. What you're alluding to is that it doesn't need to run 12 hours a day. It would run based on the needs of the residents at a much lower cost to the taxpayer. But to get to that point, I do need some direction to go out and actually see, definitively what's out there. So we can have those more detailed discussions and work kind of through what this could look like. I don't think I would be here if I thought I was coming back with a tender that was going to be around $650,000 again. But I do have to, we got to figure out what's out there, and we got to follow our procurement rules, which is I'm always trying to be cognizant of not getting us in trouble. And what we've seen in particularly in rural Ontario, as technologies has evolved, and I think some operators have been operating, is that there's different models that could be operated at more efficiently and more cost effectively.
Councillor Day.
Thanks very much. I do feel very strongly and move that we alter the scope of work to include the entire county just in this first phase, and ask that the bidders, or not the bidders, but the person or the company who comes back with the project tells us the differences between if it were just to be administered in Minden Hills and Haliburton, or the entire county, but that we start off with a county-wide approach to the investigation phase. I really do think that's important, knowing full well that we might end up going for a model that only runs between the 2 townships. Absolutely understand what Councillor McKechnie has said. Very happy that model that had that price tag, I think, has been justifiably put to bed. And I wouldn't think that we would find the same costs associated with the new model at all, because I fully appreciate your concerns on that. It was too high. But I do move that we change the scope of work.
Gary.
If I may, not to get too technical for the purposes of discussion today, I think it's, if it suits your intent, Councillor, if we can add an option to the scope work versus saying the scope work is this. It's an option, because what was it cost to do as initially envisioned by Mr. Oval's report, and then if we're looking at expansion of service to include the greater metropolitan area of Haliburton, what would that look like to the program?
Councillor, go ahead.
Yeah, I agree with Mr. Dick. That would have been my option, is actually that it would be offered as an option as opposed to the overall scope of work.
Councillor Day.
But I believe that is the proposal, isn't it? That wouldn't be a change to the scope of work. That is what is being proposed, is to have that option.
Yeah, through you, Warden. That's what we've noted in the draft scope of work, that would be included as an option. And then the respondents, they would have an option to bid on that and inline it.
Other questions? comments? Resolution?
Staff report EDT 06/2025, public transit update, April 2025, be approved.
Someone move. Councillor Shell, second by Councillor Ferry. All in favor? It's carried. Next, Scott. IT, Mr. March.
Good morning, Warden Burton, members of council. The first report I have in front of you today is for the upgrade of our corporate website. We've been informed by our website provider that the current technology for being used for our corporate website is end of life, and we need our website migrated to the new technology by end of year 2026. As 3 of our 4 municipalities are in the same situation as we are, we've been collaborating together on this project, and we're looking at, or at least the county is looking at, potentially a 30% savings versus going alone. In order to realize these savings, our providers requested that the county and 3 municipalities all sign the contract in 2025. That's why I'm here today. I had already included a new county website at a cost of $30,000 in the IT capital asset plan. I just hadn't planned on signing the contract this year. So I'm asking for $17,000 be allocated from the IT sustainability reserve to go towards this project. The contract would be signed in 2025, but the project wouldn't actually get underway and get billed until 2026.
Okay. Any questions? Councillor Danielson.
Given that Algonquin Highlands has already gone ahead with the provider, will there be any challenges associated with blending us all together ultimately?
No, so
Additional costs?
if I may, through the warden, that's not within the scope of the project, all being combined under one system. We did investigate that, but there was no cost benefit or any other benefit that was realized. The reason Algonquin Highlands is not in the project is as being the last municipality to get your website upgraded. When you went with the provider that we all share, Algonquin Highlands was onboarded to the new technology already because it was in place. Whereas the other 3, the other 4 county, Minute Hills, Highlands East, and Dysart, we're still on the older technology because we had went through our upgrade projects earlier than Algonquin Highlands. So that's the rationale for that.
Thank you.
Other questions? Resolution?
For IPS 2025 corporate website upgrade, we received information and that Haliburton County Council approved the allocation of $17,000 from the Information Technology Sustainable Reserve to be used for upgrading the county's public website.
Someone move. Councillor Carter, second by Deputy Mayor or Councillor Ryle. All in favor? It's carried. GIS life cycle strategy.
Thank you. So my next report is about NG911. For those of you who may not be familiar with NG911, it's the next evolution of 911 services in Canada, which will eventually allow text, video, pictures, and other data to be submitted to 911. Another key component of NG911 is what's called geodetic call routing, which means 911 calls will be routed via GIS data, specifically the county's GIS data, as we are the local 911 authority for our jurisdiction. So this means our GIS data must meet stringent public safety standards in terms of accuracy and completion for the use by the 911 operators. In order to achieve public safety grade GIS data, the county must analyze all of its data sets and all of the processes that affect that data, as well as engage stakeholders such as fire, OPP, our public safety answering points, EMS, and our neighboring jurisdictions to make sure all of our boundaries line up and all of our service areas line up. Due to the importance of this project and the limited resources on our GIS team, through the 2025 budget process, council approved $25,000 to be used for from the IT reserve to go towards this project. The county put together a team and we released an RFP. We got the proposals back, and we're recommending that the RFP be evaluated to a company called the BH Group Incorporated for a total cost of $27,653.28. which is $2,653.28 over the $25,000 that council approved for this project. So I'm asking for approval to draw that extra monies from the IT reserve.
Right. Questions? Councillor Carter?
It's not a question about the costing, but so, you know, one of the things, obviously GIS is kind of going longitude, latitude, and they don't necessarily line up with our address numbers. So how does that work? I mean, you know, if, you know, I'm at 2652 County Road 21, but you know, that's not necessarily, it could be a couple hundred meters away from where the long lat would point to.
According to according to the NINA standards, to my understanding, and I don't have my GIS technologist with me who could better answer this question, is that each property needs to have a point on it, right? So that it's within, okay, so if it's, you're gonna call from 11 Newcastle Street, then there's a point within this office so that they can bring it to. Now, as a part of this process, we're going to have the third-party consultant do double check some of the data sets for that accuracy and the completion. So if it does, if through that process we find that the longitude and latitude of certain addresses don't actually map neatly and correctly to point data within our GIS system, then we need to have a bigger conversation about ground truthing all of our addresses. That may be something we want to consider anyway. I know the County of Peterborough did that just due to the importance of the accuracy of this data now. They went ahead, hired some students, and were able to map or ground truth, I think, their entire county over the course of like a May to October timeframe. So depending upon what we find through this assessment, we may want to consider doing the same thing.
Thanks.
Other questions? Resolution?
That report ITS 03-2025, NG 911 GIS Lifecycle Strategy be approved, and that the Haliburton County Council will authorize staff to enter an agreement with BH Group Inc. for the creation of an NG 911 GIS Lifecycle Strategy at a cost of $27,653.
Can someone move? Councillor McKechnie, second by Councillor Danielson. All in favor? It's carried. Thank you.
Thank you.
Council, I think we'll have a quick break, 10-minute break. Thank you. Call the meeting back to order. Emergency Medical Services, Community Paramedic Vehicle Purchase. Andrea's gonna.
Yes, just for council. So Chief Slatter, after running up about 250 hours of the time during the ice storm, I believe he's away on vacation right now. So Ms. Robinson will take his reports.
Yes, Warden and Council. Chief Slatter did include this report on the March 26th council agenda. The approval for this purchase was required prior to March 31st for funding deadlines. Due to the events of March 26th, verbal approval was given to council to the CIO to proceed with this purchase. The report's being brought back to ratify the verbal decision of March 26th. I do want to point out that the report is noted as being updated. I have included the details of the public procurement process that took place for this, which was not included on the original report.
Questions? Right?
I'm going to support this, but never again, the way it was done.
All right, thank you. Resolution?
That Haliburton County Council ratifies the verbal approval provided to staff at the March 26, 2020 council meeting regarding report EMS 02-2025 community paramedic vehicle purchase, including the warden and clerk ending into agreement with 2670-379 Ontario Limited Inc., for the purchase of 3 Mitsubishi Eclipse Cross vehicles.
Someone move? Councillor Anderson, second by Councillor Bayou. All in favor? Carried. Community paramedic equipment purchase.
So similar to the previous report, this report was also given verbal approval for its same reason, funding deadlines as of March 31st. Bringing this report back for council to ratify the verbal decision. And this report has also been updated to identify the procurement process that was followed and also has updated quantities and costs based on updated information the chief received. So this report does have an increase of $855 compared to the previous one on the 26th.
Okay. Questions? Resolution?
The Haliburton County Council ratifies the verbal approval provided to staff on March 26 council meeting regarding report EMS 03-2025 community paramedic equipment purchase, including the warden and clerk entering an agreement with Stryker Canada to purchase 3 LifePak 35 cardiac monitors, defibrillators, and 2 Lucas automated CPR devices.
If someone move. Councillor McKechnie, second by Councillor Carter. All in favor? It's carried. So proclamation. Gary, do you want me to read this out, or do you need it first or second or order? Just
I can, and I can just give a little context. Sorry, I do a little context, Warden, if you will. Ms. Tiffin is actually attending the Parks Canada flood report meeting. So, so this is the third First Responders Day in Haliburton County, celebrating the great work that they do on our behalf to the public. It's a chance for the public to stop in and say thank you and ask questions about safety and prevention. And new this year to our program is additional locations now in Highlands East. Excuse me, Algonquin Highlands, and the OPP will join in Minden Hills Fire and Haliburton County paramedics in Minden rather than being a separate location. So they'll all be together for people to come see all the pieces as well. And with your permission, Warden, I'll read the proclamation.
please.
Whereas first responders are those who are in the early stages of emergency are responsible for the protection and preservation of life, property, evidence, and the environment. And whereas the first responders include professionals such as paramedics, police officers, firefighters, doctors, medical evacuation pilots, community emergency managers, road maintenance personnel, military personnel. And whereas the first responders committed to duty is unwavering, responding to emergencies with courage, compassion, and expertise. Their skills often mean the difference between life and death. And whereas the service's dedication and commitment of first responders deserves to be recognized and honored. And whereas in 2013, the Ontario Legislature proclaimed May 1st of each year would be proclaimed First Responders Day. Now, therefore, it be resolved that I, Warden Dave Burton, on behalf of Haliburton County Council, do hereby proclaim May 1st, 2025 to be First Responders Day in Haliburton County.
Okay, can I have someone move? Councillor Danielson, second by Councillor Ryle. All in favor? It's carried. Okay, external boards and agencies. I'm going to ask Cease if we have an update, I believe, from the health unit.
Yes, yes, Warden, finally, we were able to give you something to back on the actual progress that's been made. Just as you know, the health board, the HKNP, which is Northumberland and Peterborough, as well as us and Kawartha Lakes, didn't come into existence until January 1st of this year. That's one of the problems. And the second problem is we didn't get any funding approval until on or around December the 14th of 2024. So that left us a very short period of time to get a whole lot of stuff done. So some of the stuff that was in the progress of wanting to make happen had to be put together somewhere between January 1st and today. And having said that, I think it's a great compliment to Dr. Piggott, Dr. Bocking, and the staff of the two health units working together to get accomplished what they did get accomplished in the period of time that it took. To be honest, it was very difficult. We were getting not a whole lot of guidance from the province. And in that respect, a lot of it was kind of homegrown as we were making it happen. To give you an idea of the things that have been accomplished, however, the 2025 organizational structure, that's a senior organizational structure of the HKNP, has now been established. And why do I say 2025 as opposed to permanently? Is because there's a lot of variables that have yet to be defined that could impact that particular organization. An example would be that the revised Ontario health standards guidelines have not yet been approved, and it doesn't appear they're going to be approved until sometime in the third to fourth quarter of 2025. That could change the way we do business in terms of the responsibilities that we need to do in the areas that need to be covered. So that piece is still missing, although we're working with it. The other thing is as we start developing where we're going and things that we've been dealing with, the operational processes are being modified and refocused to deal with what we're currently capable of doing and what we need to do. And so what we're basically focusing on at this point in time is the areas that have initial priority, and they will be addressed based on obvious duplication, voids, and opportunities for service delivery improvement. That's the way we're going to go at it. And that is in the process of being done as we speak. The other thing that we need to look at is the merger budget itself. The merger budget was set up by the province on a 3-year program. Believe it or not, the first year expired March 31st, 2025, which really is only 3 months after the unit actually came into existence. So we've had to accomplish a lot of stuff in a period of time. Needless to say, a lot of the things that were in the first year budget could not be achieved, and those had to be moved into the second year. And the second year was due April 1st of 2025. Again, with the hard work that was done by Dr. Piggott and Dr. Bocking and their staff, we were able to accomplish that. Not to the level of detail or confidence that we would have liked, but to the fact that we're able to deal with the dollars that are going to be spent and how they're going to be spent. So that is really a good thing. The other thing that's interesting to know is that although the budget for the municipality or the health unit runs from January 1st until December 31st, the province's funding formula runs from basically April 1st until March 31st. So consequently, it puts us in a position where, again, we had to put together a fast budget in order to get approval. It's about all we could get accomplished at this point in time. So it now is in the process or in the hands of the province to determine what they're going to do with the budget that we propose. This is the merger budget is the monies that the province is going to put into the game. It's not money that's coming from us or within the operational budget of the health unit, but money that is being put in by the province to help us get through this particular process. And it's been submitted and we're waiting for provincial approval. Budget 3, which will be the last budget, or the year 3 will be the last budget, will be submitted on April the 1st. 2026. One of the items that has been included in the second year budget, which is the one that we've just submitted, and it's going to be paid for by the province, is the fact that we are no longer the HKPR or the PPH. We are now the HKNP. So that means that there is a complete rebranding that needs to be done. That is, all of the stuff that we're currently doing can no longer be referred to. It has to be amalgamated, and a new working title has to be brought forward for the new health unit. So the province has indicated that they will be putting most, if not all, of that bill. And so now we're in the process of figuring out how that's going to work. I mean, it's going to be looking at paper, it's going to be looking at the overall promotional materials that go out, the actual correspondence that's done amongst and between all of the agencies that we work with. And the second item that's on the list, and there are more than these two, but these are the two main priorities, is exactly how are we going to deal with the IT aspects of the new unit. The IT aspects include things that are related to predominantly hardware, software, and applications. And there's no way, based on the amount of time that we have, that can be done in 2025. It's just not going to happen. And so consequently, this is one issue that will probably be started in 2025 and will be carried over into 2026 and appear again in the year 3 funding for the new health unit, because we don't know what we don't know. And so as things get developed, it will be added and done at that particular time. And the last item that I want to mention, and it's one that is kind of like controversial from the get-go, is the municipal contribution harmonization. That is to say, how much is each municipality going to be contributing to the overall operation of the new HKNP? The way it was done initially was because of the timing that we had with how long it took the province gave us to get together and what we actually decided. A decision was made that we would basically adjust the budget in 2025 going forward for the municipalities to ensure that the differential between what the two groups were paying, that is what the legacy HKPR people were paying and what the legacy PPH people were paying, did not grow. And so therefore it didn't shrink, it didn't expand, it just stayed basically the same for 2025. Having said that, that option is no longer on the table for 2026 and going forward. Somewhere along the line, we have to make a decision that is going to become a universal number across all groups. What we have done is I chair the stewardship committee, and the stewardship committee has been assigned the job of coming up with the responsibility of developing a harmonization formula in 2025 that will be defined on how the harmonized number will be achieved and how long it will take. The bad news is it's probably not going to take 2025. It's going to take 2025, 2026, and possibly beyond. Having said that, remember that the government subsidy from the province ends in 2026. So we're going to have a problem there. There are several options that we can use to accomplish this. They were presented to us. I really can't go into any detail into how that could work, but what I can tell you is that we are going to be dealing with that starting in May. So it's not something that's going to be brought forward. The good news is we will not impact any of the municipalities until the upcoming budget. So the 2025 budget is already set, so we don't have a problem there. But going forward into the 2026 budget, we need to know where are we and how we're going to get to where we're supposed to be. So that's kind of sort of the way it works. And to give you an idea just how aggressively this is going on May the 1st, there will be an extended board meeting of the HKNP to determine where are we, what direction do we want to go in going forward, and to kind of set up some general guidelines, at least for 2025. Now, beyond that, we'll have a general target, but we can't be more specific than 2025. And the reason for that is basically because we don't have enough clarity from the province to determine where are we at any given point. but we have enough that we can make 2025 a substantial increase. And examples of things that we've already accomplished, there's been significant reductions in costing. One, because of the government funding from the province, we were able to pay off the mortgage on the Peterborough building, which has made a significant difference in the overall cost. It was reflected in the 2025 budget. And also, we have been able to consolidate a lot of our insurance issues. I didn't realize just exactly how expensive that can be, but it became a significant a number as well. So that is as far as I can give you at this point. When I get more information, I will report back to you on what we've done.
Great. Thank you. Just before we go into closed session, I would like just to request maybe. Go ahead.
Yeah.
Oh, health one, by all means, sorry, yeah.
So I recognize that, you know, you're now following provincial government budget cycles and so on, but you know, your 26 budget, which is due April 1st of 26, you know, we're probably working on our numbers in October of November of 25. And so, you know, I think we're gonna need to have at least some indication if there's, you know, I'm not suggesting that you get it to the penny, but we need some indication of if there's going to be any gross differences, particularly when you're talking about a more harmonized funding model per municipality. But, you know, it's a 6-month period gap there where, you know, we need some indication so we can set our 26 budgets.
Please.
First off, I apologize for not being clear. The 2026 year 2 budget is only the merger budget that is going to be sent to the province for the subsidization that they're going to supply us. It has nothing to do with the operational costs associated and will be translated to the municipalities. This is basically our provincial ask. This is the stuff that we need to have happen that we believe should not be paid for by the municipalities. It should be paid for by the province in the process of becoming merged. As I say, examples would be items like rebranding, items like the overall IT and everything that's related to that. And I'm sure there are other issues that need to be dealt with. These are not items that we will want to transfer to the province or to the individual municipalities. With regards to establishing the operating budget, which is the actual HKNP budget, that will follow normal steps. And hopefully we will have a budget to you. We would like a preliminary number in October, which is basically where we were last year, October, November. And I can't see that not happening. But again, you're going to get updates before that. So it's not going to be like, oh my God, on October 1st or 3rd, you're going to get boom. We're going to be giving you, or at least try to give you as much information as we can as we go along. This budget number that we're talking about in April 1st that has to be delivered is merely the ask from the health unit to the province.
I understand that, and it's the operational one that's the most important to us. But when and I don't know all of the programs that existed in the 2 different health units. But for instance, if Peterborough had a number of programs that we did not have, and then in the new harmonized or merged group, you decide to add or subtract programs, that affects the operating budget. So that's really all I'm trying to get clear, that, you know, we need to know in that October, November timeframe if we're going to be able to prepare our budgets.
So,
Gary?
thank you, Warden. So to your point, Councillor Carter, I share the same not concerns, but same questions. And so Ms. Robinson and I will be reaching out to the new medical officer of health in June, because we start our process a little bit earlier. And she's getting some indication as to where we're going to sit with respect to comparisons to last year's budget. There have been some, I don't want to call them assurances, but some conversations leading up to this that we're not expecting something significant until you see it, you don't know. And to Councillor Ryle's point is we fully expect to receive the the final version of the operating draft budget from the health unit in the early fall. So, but we're trying to reach out before the summer starts. So we have some kind of starting point when we're putting our early numbers together in June and July.
Cease, go ahead.
If, and again, this is not a reply or a statement based on we don't want to. It's based on the fact that we don't know. Your question is very valid, and I don't have an answer. Okay, there are programs, and this is part of the reviewing of all of the programs. There are some programs that are redundant or duplicated, which we need to figure out what we're going to do with. There are some that have great value but may not be applied to all of the various regions, and maybe they should or should be modified so that they can be applied in some cases to one level to another. And there are others that are completely missing, which hopefully we'll be able to have more information once we get the health standard guidelines coming through, which again, a lot of missing information. And I apologize for not being able to give you an answer, but it's because we just don't have it.
Okay. Other questions? Not, we'll move on. Correspondence?
Yeah, there's as it's attached to council's package, the correspondence from Ms. Kennerson regarding, I believe, her support of the library. Okay. And that the correspondence be received.
Okay, could someone move, receive the correspondence? Councillor Danielson, Councillor McKechnie. All in favor? It's carried. Thank you. Bylaws for consideration.
That the following bylaws be approved, bylaw 4300 and bylaw 4301 as referenced earlier in the agenda.
Someone move. Deputy Mayor Ryle, Councillor Ryle, and Councillor Dayou. All in favor? It's carried. Now, just before we move into close, I would like to request a letter of congrats and thanks to Janine Mitchell in recognition of her more than 25 years of service, dedicated service to the people of Haliburton County. So the council's indulgence, sir.
With that direction, we'll forward it on.
Thank you.
I think Janine actually started with Victoria County before supported this before the CCAL was formed. So,
okay, motion to go into close. Councillor Danielson and Councillor Dayou.
that in accordance with the Municipal Act 2020, sorry, Municipal Act Section 239A and B, Haliburton County Council enter closed session for the following reasons. A, the security of the property of the municipality or local board regarding information technology systems and personnel matters about identifying individuals, including municipal local board employees at 11:17.
Someone move. Councillor Shell, second by Councillor Carter. All in favor? Carried. Great, thank you. Confirmation bylaw.
That bylaw 4302 being a bylaw confirming proceedings of the April 23rd, 2025 meeting of Haliburton County Council be considered to be read a first, second, and third time and finally passed.
Someone move. Councillor Carter, second by Councillor Ryle. All in favor? It's carried. Adjournment. Me. And Danielson.
That the April 23rd, 25 meeting of Haliburton County Council be adjourned at 2:49 p.m.
All in favor? Carried. Thank you.